What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about into this video is AUD and ZD. Now, why do I want to speak about AUD and ZD? Because this pair is very near to providing to us a good trading opportunity. So I want to give you guys a full breakdown of the situation that we currently have to show you where we can be looking for the next potential opportunity on it. And as usual, I will be keeping this analysis as educational as possible. So first, we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what the non-commercials are doing in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will try to understand where we have the highest probability opportunity on this pair. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we have a market which has just provided a nice W formation. Now, generally speaking, after the creation of a W, what you expect is for the market to complete the pattern at the previous resistance turn support before creating the continuation to the upside. So here in the monthly, what we expect after the creation of this pattern is first for the market to provide the move to the downside, which is, by the way, exactly what the market is currently doing. And then we expect for the market to provide the continuation to the upside. Now, if we are to identify exactly which is the previous resistance, which is now turn support, we can see how this area is exactly previous resistance that the market had rejected to the downside, which, now that the market has broken it again to the upside, is turned support inside of here, from which we can expect the market to provide a rejection to the upside. So at the moment here in the monthly, everything is quite clear. The market is testing previous resistance turn support, and we can expect the market to provide a rejection to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly, we have a market which has just provided a very strong impulse to the upside. Now, generally speaking, if you have an impulse to the upside and in that impulse there is only one candle which is not related to the move, that only candle not related to the move is a strong demand area, which in this case is basically strong demand. And you do expect the market to reject this demand area to the upside. So at the moment, here on the weekly, everything is quite clear. We do expect the market to create a rejection to the upside. Going down on the daily time frame, what do we see? Now here on the daily, we can see how the market has just provided a nice M pattern. Now, generally speaking, if you want to really pinpoint the structure of the market, it is always a quite good idea to go and see what you have on a line chart. But in this case, I forgot to show you on the weekly. If we do this on the weekly, what can we see? We can see that the last weekly close is exactly this previous resistance, which is now turned support. I mean, in this impulse to the upside, there are two closes, this one here and this one here. And these two weekly closes are very strong structure areas, as we had already identified by looking at the line chart here in the weekly time frame. But this is definitely added confluence to the structure support that we have inside of here, from which we definitely expect this market to provide a rejection to the upside. If you have any requests for other breakdowns, make sure that you leave it in the comment below, and also make sure you like and subscribe. Now, as we were saying here on the daily, what do we have? Now, here on the daily, we have a market which has just provided this M pattern. Now, after the creation of an M pattern, what you expect is for the market to provide a move to the upside to go and complete the pattern itself at the previous support turned resistance. So here on the daily time frame, what we expect is for this market to provide a nice move to the upside and complete this M pattern at this previous support, which is now turn resistance. So what we expect is for this market to provide a nice move to the upside and basically complete the pattern at this level. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what do we see now? On the AUD, we can see that with the last reports, hedge funds have been increasing their net positions on the AUD. In fact, we went from having 5.9k net positions all the way up to having 12.2k net positions. So the net positions on the AUD are getting increased, and we can see how with the last report, we just reached 66.6k long positions and 54k shorts. So the AUD is getting extremely strong from an institutional perspective. And if we go and see what we have on the NZD, we can see how on the NZD, we just went from having 17.1k net positions all the way down to having 4k net positions. So overall, the NZD is getting weak and the AUD is getting strong, meaning that institutions are shifting their positioning to the positive side of the AUD and to the negative side of the NZD. And that is exactly what we need if we are to create this move to the upside here on AUD NZD. If we want to see the completion of this M pattern at the neckline, we definitely want to see a strong AUD and a weak NZD in order for AUD NZD to actually create the move to the upside. And since that is exactly what we see, how we can be approaching this potential longing opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the directional aspect of the market. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower inside of this area, and we will be waiting for the market to shift from a 4-hour and lower bearish market as we have right now to a 4-hour and lower bullish market. And as soon as the market will shift from a bearish to a bullish market at that point, we will be adding AUD NZD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this M pattern at the neckline, which is the previous support, now turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also comment below and let me know which pairs you would like me to cover in my next videos. Also, make sure you go and check out the mentorship program. It's a very complete program. The link is in the description. First, you get all the rules of my rule-based strategies, and then you trade the strategies with me. Each and every day, you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as having me answering all your questions every single day, including the weekend. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.